What is up, Drew? How you doing?
Doing good, man. How are you doing?
I'm doing well. It's been a long time.
Yeah, long time no see. Summer hiatus. That's where we're at.
Well, I know you were on a trip. It went well.
Yeah, things are good. I have another trip too next week actually. I'll be up in New York City, so I'm really excited about that.
Oh, man,
So,
that's kind of
yeah.
like a work and pleasure, though, right?
Yeah, actually mostly work. It's a lot of like role plays, just ironing out my skills, iron sharpens iron, and I'll be with everyone else who's in the exact same position as me, a couple months in and just trying to figure it all out. So,
That
I'm
is.
excited. How about you, man? You were in what was that, Patagonia or
Yeah, we had gone to like Lake Havasu, Parker, Arizona for that was like a week. Came back from that, and then I was sick pretty much all last week. So I'm getting out of being sick and back in the swing of things. But overall, dude, it's crazy, man. We're already freaking all the way mid through July. So going
crazy?
to kind of the second half of the year here, which is wild. But yeah, Drew, do you want to hit us with kind of a market update on your end?
Absolutely. Yeah. So as typical when we do these videos, I like to cover three indexes. I usually cover the S&P, Dow, and Russell 2000. They give kind of a broad variety of indexes, different types of metrics as to what's going on. So S&P this past 5 day periods down about 0.83%, but year to date it's up about 17%. So the S&P has been performing very, very well. Dow Jones this past week was up about 3.79%, and year to date's up about 9.5%. And then the Russell 2000 is up 8% in the past week. 8% in the past week. And year to date, it's up about 11.2%. So all in all, we've seen a lot of really good returns this year. There's actually a study done that basically says that every single year you can almost expect to anticipate somewhat of a pullback throughout the year in some point. And if it does go beyond that 5% pullback, generally the market ends up. We did see a pretty substantial pullback in April, March and April of this year. And so ever since then, it seems like it's been on this climb that can't be stopped. So ideally, just making sure that you're keeping up with those investment strategies. If you are investing, just being consistent, capitalizing on these gains. Because in an upwards market, it's easy to feel like FOMO, where you feel of missing out. And you want to invest all your money in to make sure that you can continue to ride this wave of appreciation. However, there always is a top, there always is a peak, and we don't know that. We don't have crystal balls, and so making sure that you're just staying consistent, you're not feeding into the FOMO, and you're kind of just riding the wave out to really understand and say, hey, I have these strategies and this principles to do this reason and for this reason only. That way you are taking emotion out of the picture. So that's the number one key there. And as for just a general market update, I would say there's been a lot that has happened throughout the markets. It's been a very interesting year this year. I will say that interest rates were anticipated to have a decline throughout the year at the end of the year, back half. And the Fed came out a couple weeks ago and said they're not anticipating any rate cuts until the beginning of 2025. And so, if you were sitting on the sideline on cash, kind of waiting to see what happened to then deploy funds, it seems to me that most investment opportunities are going to stay roughly the same that they are, at least going into the end of the year in terms of debt assets, so bonds, CDs, and fixed income type products. And so you might as well capitalize on it and just continue to ride the wave at these high interest rates. And then next year you can redeploy. Again, it's not guaranteed. The Fed could come out tomorrow and inflation could skyrocket in the next month or two. And Fed comes out and cuts rates immediately as a reaction. But I know that Jerome Powell's really focusing on not having knee jerk reactions to numbers. He's a very logical guy and slow moving. And so making sure that we are keeping pace and keeping on top of our knowledge and making sure that we're understanding, hey, this is what's going on, this is what's anticipated, things could change, but generally speaking, we won't see anything happen until the beginning of next year. So that's my market update.
Nice. And Drew, what can you speak a little bit about something that I am doing with you, not to get like client specific or like cross any boundaries, but um, maybe talk about the strategy that, kind of could be a call to action for anyone watching.
Yeah,
Um,
absolutely.
of kind of what we're doing together, or the
Absolutely.
strategy I'm taking down? Could you just kind of briefly go over that and why it's beneficial?
Yeah, absolutely. So I mean, there are strategies out there, and the one that we're working on doing together is basically building up a stock portfolio that's essentially growing over time, right? So you're having your money being deployed into a portfolio, and while your money is growing, taking loans against your stock to then buy investment properties elsewhere, uh, so that your stock portfolio is the collateral to your loan. And ideally, the unique thing about what's happening when it comes to this is that you're giving yourself dual opportunity for upside, right? Because you're not only earning money and interest on your stocks, but you're also looking at earning interest and appreciation on your investment in real estate. And if your stocks are performing higher than the interest rate that's on your loan, you're effectively making more money, and you're not even losing money from an interest standpoint, right? So you're basically making free money while accumulating two assets, but having the leverage ability to be able to do that. So it's a super unique strategy, and it allows you to maximize your funds. Now, what I will say is this is a very aggressive strategy, right? Like, you don't do this if you don't have large, growth potential, and you don't have a huge time horizon. Like, it's very client specific that you do this. And honestly, taking loans against your stocks is not something that we generally like to even talk about. But for specific clients, it is an option that exists that you can do. And so having the understanding that, hey, this is out there and it exists, and you can utilize that strategy if you want to, is totally doable. So that's a little bit about the strategy without getting too specific.
Yeah. No, I love it, dude. And the other strategy or option, I guess, if anyone's wondering, is you could always just sell out your stocks, cash out, and use that as well.
Absolutely.
So, the thing that Drew and I are kind of discussing is a little bit more aggressive, a little bit more maybe leveraged. But I think the important thing is to understand, if you do A or B, take loans out against your portfolio or cash out and use the cash to reinvest. Whatever it is you do, whatever it is you're investing in, you best know what you're doing.
Absolutely.
Right.
Absolutely. And consulting a professional for
Yeah,
sure.
100%. So that's, for me, I'm in the real estate game. That's all I do. So for me, it would make sense to invest in what I know, which is real estate. Like, I'm not going to go buy a bar and try to operate like a bar that's just ridiculous, right? So just making sure that you're investing in what you know. Drew, is that all for your market update?
Yeah, and I want to actually do one more cap off too as well, because I think it's super important. When it comes to, the idea of investing and then selling out and then using that to purchase, right? Which is an alternative option that we're exploring as well, right? It's, when you look at that, people would say, well, why wouldn't I just hold it in cash? Because there's potential for downside, right? And ideally, what it is understanding that, generally speaking, your money is going to see an 8 to 10% appreciation in the S&P 500, and that's just baseline, right? They're generally, JP Morgan portfolios tend to outpace the S&P. Now, it's not a guarantee that won't exactly happen. However, we have seen that in the past with historical data that JP portfolios will outpace the S&P. So what does that mean, and why is it? So ideally, when your money's long term and you're thinking about it from the perspective of, I want to build a bucket of money that I can then take out, and if I need to in the future, and funnel into deals on the real estate side of things when a good deal comes. It's almost like a savings account that has the appreciation ability to earn more than what a savings account would, right?
Right.
It's a riskier play, which is why there's that lending component, right? Because you ideally don't want to pull from a down market. So I'd rather you take a loan out and use your stocks as collateral, opposed to actually pulling out on a down market, which is why there's options, right? But having a bucket of money that you can say, hey, I can pull from this, or I can pull just the winners, right? I can take out the ones that are actually net positive, and then I can use that and hold my losers in the account. Those are the types of ways you can do it. So it's a unique strategy. It works very well. And it's definitely an interesting way to look at things, and maximize your ability to earn and save. So
I
Yeah,
love it.
yeah,
It's such a cool strategy, and I think, like you said, if the S&P, right, is making 10 to 12% a year, and maybe, Drew, you can perform better for someone, right? So let's say anywhere between 15 to 20, or I don't know, right? Give a range. And you can borrow against that at, say, between 5 to 10%, um, you know, that would make sense, right? Because at that point, let's say you're making 20% year over year on your money continues to grow. And the reason that you want to keep it there is because of the compoundability. I don't even know if that's a word, right? But if I have 200 grand sitting in my stock portfolio, making 20%, right? That's 40, what is that? 4,000? No,
40,000.
that's 40,000, right? So that's 40,000 bucks it's making, right? But then my interest on my loan that I take out against it would only be costing 20,000 per year or whatever it is, right? And so because of that, it would make sense to do more of that aggressive approach than having your money sit in a savings account, which is maybe making 4% at best or 5% at best. It just doesn't make sense. So again, to your point, it's much more aggressive. It is higher risk, but for you and I, people like we have the time on our side to be able to afford that risk, right? Maybe we don't have the money now, but we have the time to work our way out of it, or whatever the case is, right? Where someone in their 60s, 70s, 80s, that probably doesn't make any sense to do, you know? So that's really unique. I'm glad we talked about that. I think that would be our call to action for this video, is just that unique kind of strategy. If you guys have questions on that, maybe it's something you want to do and look at, talk to Drew. His info will be in the description below. Um, and there's so many different strategies, right, Drew, that someone could achieve, those types of things. It doesn't have to be that exact strategy. So talk to Drew. Take some time, sit down with him, and it's really beneficial, guys. Because I mean, Drew, you and I have sat down, maybe a few times, throughout the past couple of years, and then once it's set up, it's completely set up, and you don't have to worry about it. But the longer you take to sit down, figure out an action plan, figure out your goals, with Drew, I mean, the longer your money's not working for you, and that's a bad day. So you want to make sure your money's working for you. We all work extremely hard, or I'd like to think so, to earn, our monies. So might as well put those monies to work. Um, I'll briefly go over the market summary for Pima County, and then we'll kind of wrap up if that's cool with you, Drew.
That's perfect. Yeah, definitely.
So I'm going to kind of cross-reference last year's market in June of 2023 and compare it to this year, just so we can kind of get an understanding of where we're headed. So as far as Pima County, June of 2023, the active number of listings we had in real estate was just over 3,000. In today, June of 2024, we are just over 4,000. Okay, so year over year, we've seen an increase in about 1,000 listings, which is pretty substantial. Last year, we had kind of an average listing price of 395,000. Today, we are coming in at about 385,000. So we've actually seen a decrease in listing prices of about $10,000 year over year. The interesting thing is that when it comes to the actual sales price, year over year, we've seen an increase in $5,000. Okay, on average. So we've seen a decrease in listing prices, but an increase in actual selling price. Okay. So what that tells me, and should tell you, is that we're seeing an increase in listings, and therefore sellers are having to get a little more competitive. And I think we've hit a little bit of a top of market, if you will. We're not in 2020, we're not in 2021 when prices were jumping like 10% a month. It's just freaking crazy, So we're kind of hitting what I would say kind of the top of the market, right? So we're not going to see pricing, completely dilapidate and go down, but we're not going to see it increase crazily like we did in the past couple of years. The absorption rate back in 2023, this is your month supply, was 2.44, so about 2.5 months. And today we're at about 3.5. So we've seen an increase in 1 month. All right. Which 3.5, again, we're still relatively in a good seller's market there. But it has slowed. And then as far as days on market, we currently are around 44 days on market. And last year we were at about 46. So we're about the same when it comes to the time it takes to sell a home. All right. We're just seeing that increase in number of listings. So buyer demand still seems to be somewhat strong. Um, we're not, on the verge of like a massive decrease in pricing and like 2008 crash. Okay. So it's still a very healthy market right now. Um, that's it. That's it for my market update. Drew, did you have any quotes or questions regarding the market?
Yeah, actually, I do. So I'm curious to know because I've heard a lot of different strategies. The seller concession route, so offering to list your house higher and then, offer back some in concessions. I've heard of previous topics in the past where they're talking to 3-2 buy downs, where you buy down the rate. What are you telling sellers at this point to do to best position their homes to receive the maximum amount of offers?
Good question, dude. I love it. So, what I personally do, I know there's a lot of different ways around this, but what I tell people um, to get the max amount of money for their home is to price the home in a way that gets as many people physically to the home as possible. Because when you get as many people physically through the home as possible, that's when you actually procure offers, and then offers can lead to bidding wars, which will then take you to the max that the market's willing to pay at that given time. So you can know for sure as a seller, I got the max amount of money for my home when I can create a bidding war and work them against each other until someone stops, taps out, and the other person gets the home, right? So that's kind of the way I like to market homes. Now, not every seller agrees with me, and they typically will just want to take the home to what they feel it's worth, which is fine. At that point, we have a conversation of, if and when the home doesn't sell in X amount of time, because it won't, because I know that, you know, we have to be able to come down in price. That makes sense, right? Um, so yeah, to answer your question, it's really a conversation of, look, we have seen an increase in listings. What's the competition in the immediate neighborhood? So there's a lot of factors we look at, but ultimately the thing that affects, getting top dollar for their home the most is going to be pricing. How do we strategically price the home relative to your competition? So, there's a lot that we look at, but that's the gist. Do we price the home correctly? And are the sellers, um, willing to sell it for what the market's willing to pay? Because at the end of the day, the market decides what it's willing to pay, not you, not your aunt, not even your realtor, right? So my job is to highlight the home in the best light, try to make it really marketable, and then take it to the market in the best way to then, create the best offer. So that's kind of this conversation, we have. Um, but, a lot of the time sellers want their price that they think it's worth. And so, at that point, it's just a matter of choice for the agent to say, I'm willing to do that. I'm willing to invest money, time, and energy. We just at some point have to come down in price if nothing, if no offers are generated, right? And so, for example, like I have one client right now, and he just wants to net the most amount of money as possible. He's not coming down in price, and even after you explain that to him, he doesn't want to drop the price. And the real issue is that he doesn't really need to move. So those are the conversations you have to have with people. Why are you needing to move? What's the absolute latest time you need the home sold by? Where are you going? What's the plan? So, just things like that. But I don't know if that even answered your question.
Ah, that was perfect. That was perfect. And I think, there's a couple takeaways from that, right? It's knowing your clients. It's knowing who you're talking to, knowing who you're selling to, because that's super important, right? Is the price, super important. Is where they're going, do they need a quick sale, and then determining as a professional, and so I think trusting someone like Cade uh, to give you the best professional opinion and best professional advice based upon your specific situation is super important. But another really awesome thing that Cade has access to, which is the whole reason why we're here, is a laundry list of realtors that he can send his listings out to in order to share and drive a lot of people to the condo or to the location of which he's selling, whether it's a condo, a house,
Yeah.
anything. So uh, his laundry list of network of realtors is actually at NGRN. A lot of them, they show up, and that's why we're all here. Uh, and and we meet again, like I said, once a month. And very excited. Our next meetup will be August 16th, 5:30 8:30 at the Arizona Sands. And yeah, it's just a great time to meet a lot of young professionals, entrepreneurs trying to to really make things happen. I actually had breakfast with someone who is an elder, I guess you'd say, here in town, who's very well connected, knows a lot of the top dogs. And he said, your thinking is exactly right. You grow through who you know. And I guess we'll use that as our quote. You grow through who you know.
Oh,
And
that's great.
I think us working all together and really growing is what's going to lead us to all be successful when it's our time to shine. And he said, the next generation needs to be up and coming. And so to have those leaders be there to do that and facilitate that is super important. And that's kind of what we try to do. We want to make sure that all of us are leaders in our community and within our networks. So that way we can all help each other get to the top where we want to be. As ideally, there's way more than enough people to feed us all, right? We're not competing here for listings or financial advising clients or, you know, janitorial clients. Like there's no competition there. There's enough for us all to eat. And so getting connected with people who are like-minded, understand the processes, understand how to do different things uniquely, figuring out different strategies that you can partner with professionals like Cade and I have done. It's very awesome. So again, April or August 16th from 5:30 to 8:30 at the Arizona Stand.
Love it. Thank you guys so much for watching. Again, if you have questions for me and Drew, you want to go to the meetup, or you just have questions about real estate or financial advising, our information's down below. You can reach out to us directly. Otherwise, we'll see you in the next one.